thank you especially for allowing me,
New time.
Chairman, thank you especially for allowing me to be an interloper, given that I'm not officially a part of this committee. I'd like to thank the witnesses for appearing and address Mr. Grignon. Sir, you've indicated from your testimony that you believe that more expansionary monetary policies are necessary. We do know that the Fed announced on December 12th that it would keep buying $40 billion in mortgage-backed securities per month, and that it would begin buying $45 billion in long-term Treasury securities. Now, given these circumstances, and I assume that you concur with what the Fed is doing, is this a fair statement?
Yes.
All right. Given that you concur, would you elaborate on the type of monetary policies you think would benefit us in terms of them being expansionary?
Sure. Over 3 years ago now, I warned that the Fed was on a path to being too tight and urged it to do a lot more in terms of buying long-term assets to hold long-term rates down to get spending up. Over the years, the Fed has belatedly, begrudgingly moved to pretty much do what I had asked 3 years ago. I think at this point, what I think they could usefully do is to give some more assurance to the housing market that mortgage rates will stay low for a fixed period of time, perhaps 12 months. That would give banks comfort that if they want to make a mortgage to a borrower, they can sell the MBS to the Fed at a fixed price, say 2%, for 12 months. It would encourage banks to staff up their mortgage departments to make more mortgage loans, and it would give house buyers some comfort that if they go into the market this year, they would have several months to shop for a house and the credit would be there, and they wouldn't have to worry about rising rates. And it would really, I think, have a nice dynamic for the housing market. I think that's an important thing the Fed could do, which would be better than what they're doing.
You also mentioned other types of refis. Would you elaborate on some of the other refis that might stimulate the economy?
Well, what would really be helpful, and this is sort of beyond the Fed's ability, would be to really get the housing agencies to stop discouraging refinancing of old conforming mortgages. A lot of people still have 6% mortgages.
Just for edification purposes, when you say housing agencies, would you be more specific? Are you talking about Fannie and Freddie?
Yes.
And that would be under FHFA?
That's correct.
And that would be Mr. DeMarco?
That's correct.
Continue, please.
I do not understand why FHFA has been allowed to not push the agencies harder. A refinance, fairly automatic refinance automatic approval of refinances of existing mortgages that are already guaranteed by Fannie and Freddie but are paying high interest rates.
For further edification, are you saying an automated system that would allow FHFA to ascertain which of these products can be refinanced and streamline a process so that we can sort of clear out many of the homes that persons are underwater in and would probably walk away from some of them, don't know how many, but a good many might. But if they can refi, they'll get a reduced payment and they'll stay in that home. Is that some of what you're saying?
That is exactly what I'm saying. I think it would reduce the risk to the government because if people can get a lower payment, they're less likely to walk away from their mortgage. And since the government is already guaranteeing that mortgage, it's better to reduce the payment to make it less likely to fail.
But now this is not something that the Fed can do. This is obviously within FHFA's purview.
That's correct.
Now, quickly, one more thing. Are you familiar with the term expansionary fiscal contraction?
Yes.
Would you quickly explain, in your opinion, whether this term applies to the current economic circumstances?
Absolutely not.
And if you would quickly, I only have 30 seconds, but maybe you'll be allowed to go over to give your explanation.
Well, one of the things that we're learning is that the effect of fiscal policy on the economy depends a lot on the state of the economy, and it depends a lot on how the Federal Reserve will react to fiscal policy. And so when the economy is booming, fiscal policy has a very big effect because the Fed tends to offset it. So if you cut taxes in a boom, it doesn't stimulate the economy anymore, it just tends to raise interest rates. But if you cut taxes or raise spending in a low state of the economy, the Fed will not react, and it will pass through to spending much more strongly. So a lot of studies are coming out and saying that fiscal policy has a big effect on the economy in a recession. It has very little effect in a boom.
Thank you, Mr. Chairman.
Thank you.